this year should be probably more interesting than 2021 because it's a pivotal year. It's the year that leads up to LIBOR's supposed final demise, and all 6.10 trillion in notional value contracts have to reset. And we're going into this year with probably an awful lot of volatility and a lot of conflict, because I do think that 2022 is actually a pivotal year, and this may well be the last opportunity that we have to get into proper position to weather it. Because the Fed, to save their credibility, this is really why they're doing it, that they've got to raise interest rates. Now, how much they're going to raise interest rates? How much can they raise interest rates? Because as you can see from this Federal Reserve graph on the, this is the overnight Fed funds rate, it has been trending down since we went into a full debt-based system. Can they raise the interest rates? Well, you can see that every time prior to them raising the interest rates, what happened was it pushed us into an official recession. Unfortunately for many, even though officially we're no longer in recession, it was the fastest recession in history, a lot of people are still in recession. But what is the Fed saying? Well, you look at their dot plots. So this is the FOMC meeting where they discuss how they're going to and how many times and at what level are they going to raise their rates. And you can see that they expect 3 rate hikes this year. Now, understand, we're starting at such an extremely low level that even with 3 rate hikes, well, you know, what do we have going on? Even with 3 rate hikes, the circumstance for corporations are the interest rates are going to be keep everything very, 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 very loose and very, 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 very easy. And you see right off the bat, starting out this year, you know, stocks are they don't know quite what to do about this. But if you look on the graph from the Federal Reserve, their balance sheet, right? Since 2008, every single time, and this is not just true for the Fed, this is true for all the central banks. Every single time that they have made an attempt to raise rates and stop all of the money printing, it has been a big fat fail. Is this time going to be different? Well, I don't know, but insanity is doing the same thing and expecting different results. And so my bet is, and hey, I am not a soothsayer. I have crystal balls that don't tell me anything, but my bet is that before the end of the year, they will be back to this. And they will not be able to raise rates. So we will see what time tells us is actually going to happen. But for their credibility, they have to give it a shot. So I just hope that you are prepared for it. Because again, this could be the last year that we have. Remember, all of those contracts must be reset before the final demise of LIBOR in 2023. They all have to be shifted into SOFR, and that changes the valuation of every single contract. This is going to be a really interesting year. Profiting from a historic run-up in share prices, U.S. corporate insiders sold a record $69 billion in shares this year, up 30% from 2020 and 79% more than the 10-year average. Wow. Okay, so do you think they might know something that you don't know? I think they do, because they do have insider information. They know what's going on in their corporation. When you see this kind of activity, we've talked about it many times before the crash. This is always the kind of activity that you see. The only reason why you have not seen the market itself, the overall market itself crash, is because the few, again, we've talked about this a lot too, but there are just a few corporations that are pushing all of those averages up. when in reality, you have more than 1,380 companies that are trading at or near 12-month lows. So when you see a lot of the insiders selling, because to you, it looks fabulous, stock is up, it is actually a red flag telling you that they know something that you don't, but you need to know. Now, they legalized this, we'll go into this a little bit more, but they legalized this back in 2002 because, of course, the head of a corporation is going to have insider information. And, of course, it is typically illegal for insiders to trade based upon that information. With the central banks and the government entities, you know, congressmen, senators, etc., women, both, selling or using the information and the influence that they have. Did they use it? I don't know. But they have the ability to move markets and they're trading on their behalf. All of this really seems like it should be illegal. Is it? Well, you know, yeah, it really was illegal until 2002 when they adopted the 10b5-1 rule. And that tells the people that are doing this how to do it legally. So they just follow the rules. You can't blame them. I mean, the loopholes were created for their benefit. I'm sure none of this had anything to do with lobbying, and I'm being very facetious about that. We're moving toward a time of programmable money. You're not spending as much as they want you to spend. You're trying to save some money for your future? Oh, heck no. No, they will make sure that you spend it because you'll just watch the principal evaporate. And if they can get a chip under your skin that's programmable, they can program you too. I can tell you right now, I'm not agreeing to it personally. You got to do whatever you're comfortable doing. I can't tell you that, but I can tell you for me, I will never agree to it. Doesn't mean that they can't force me, but I can't really see that because then it would be too obvious. It's kind of like what we're seeing out in the world and the way that they're trying to force you. Hey, you won't be able to travel. You won't be able to go into stores. You won't be able to go to a restaurant. You won't be able to do anything. Just comply. But then what they call it is voluntary. This is what helps me avoid that. This is also what helps me avoid that. This, no avoiding it.